Welcome back to GoldSeek TV. I'm here with the president and CEO of Fortuna, Jorge Ganoza. Thank you for coming back and joining us today.
Peter, a pleasure to join you again.
I am excited to speak with you today because we have two big news items out of Fortuna. One is the commencement of gold production at Séguéla, and the other one is an acquisition, which expands your footprint into West Africa. So with that, I'd like to first talk about Chesser Resources and what this acquisition of this Australian-listed gold company in West Africa, what are the assets that have attracted you to make this, which appears to be a friendly takeover, and what does this project mean to the company, and how does it integrate into your strategy and business model?
You know, we are strategically focused on growing our business in the countries where we already operate. Fortuna is a company with a diversified footprint. We operate in 5 countries, 2 continents today. So our focus is countries where we operate or near neighbors, right? Strategically near neighbors to the countries where we operate. So places where we can leverage the existing management infrastructure we have in place. Mm-hmm. And Séguéla ticks that box, no? It's Francophone West Africa, pretty close to countries where we already operate, and a place that we can service from our established regional hub in the city of Abidjan in the Ivory Coast. Mm-hmm. So strategically fits that. Strategically, we are more focused today on organic growth, harvesting the portfolio, but we also keep an eye open for good pre-development stage opportunities. Mm-hmm. And Chesser in Senegal has been able to advance what's, we believe, one of the most exciting emerging gold deposits in the region. The Chesser ground is located in the heart of the Senegal-Mali shear zone, which is host to some of the most prolific and productive mines in West Africa. Yeah. That's where Barrick operates, the Lulo and Dunkoto gold mines. B2Gold has the Fekola mine. IAMGOLD is present in the area. Mm-hmm. So these are properties. It's a productive district, and the Chesser ground is in the heart of that belt.
So the property has, or the company, this area, this project has 4 deposits. It looks like they had mostly indicated a resource established at the end of, I think, 2022. If we could talk more about that, because it had some really nice numbers on it, really good grades, near surface, oxidized material. So what do they have right now, and then what is the potential for growth?
You know, over the last 3 years, really, Chesser has developed a resource, and it's around 750, 800,000 ounces. Mm-hmm. So today it sits as a sub-million ounce resource in different categories, right? Now they decided to advance that resource through to a preliminary economic assessment and some pre-feasibility work. And that's where the deposit is at. For us, a sub-million ounce deposit doesn't really tick our investment criteria. Mm-hmm. But what we see there is something more exciting than the sub-million ounce deposit that they have advanced up to now and then focused on engineering. They show in their PEA that this sub-million ounce resource has robust economics, you know, a high internal rate of return of around 40%. Mm-hmm. But what we see there is exploration potential for a bigger deposit. We believe the 3-4 deposits where they have outline ounces still need more geologic understanding and can potentially grow. And beyond that, in the property package that they control, there are multiple opportunities that have not been tested yet at all, or have only a few holes with good indication of potential. So what we see here, we're attracted by the exploration opportunity today more than the development opportunity.
Okay. So upon the successful completion of this acquisition, which would what would be the time frame for this?
August. We
August.
believe August.
And then after that, you would look at the project, look at where things are at a little more closely, and then establish maybe more aggressive drill campaign and exploration campaign.
Yeah, Cesar has been dealing with a lot of the challenges that many early stage developers, explorers have been dealing to, which is a dismal market to fund mineral exploration, right?
Mm-hmm.
And so I believe by combining Cesar into Fortuna through this acquisition, we are de-risking financially what we believe is a most exciting exploration opportunity in a world-class location, right?
Mm-hmm.
So our priority will be exploration, and we expect we can grow this resource beyond 1 million ounces, and once we have a resource with the size and grade that meets our investment criteria, then we would start thinking about advancing it through to development. But effectively, for the benefit of the project, the benefit of the Cesar shareholders, and the benefit to Fortuna, I believe this is a win-win where we can de-risk financially this project and advance it more with a technical focus, let's say, than just a market focus, right?
Mm-hmm. And the shareholders were given a nice premium on the Chester side, so they seem to be quite supportive. The board is supportive, so this looks like this is a good synergy. The shareholders and management are supportive of this, and that Fortuna can now, as you say, advance the project more aggressively.
Again, the Chester stock has been was a bit discounted, we believe. So we were open to paying a very competitive premium.
Mm-hmm.
We're basically pro forma ownership. Chester shareholders will own 5% of the company.
Mm-hmm.
And right off the bat, this sub-million ounce deposit is adding about 10-13% of the ounces. So we're giving 5% of the company for 10-13% of the ounces in total inventory. So right there is just accretive. And we believe there is significantly more value to be unlocked through proper exploration. And, geologic risk is something that we are comfortable taking because that's our business. Mm-hmm. It's not just about Fortuna putting money into something, because anybody can do that. Yeah. We add value when we can come into opportunities like this, where we leverage our technical, geologic, geoscience into our appreciation and evaluation of an opportunity, right?
Right. So this really continues to expand your footprint and your position in West Africa, which as we've discussed in the past, is quite an exciting area. You just mentioned that a lot of tier 1 gold companies around this area, around where Chester Resources has their project. It's a very exciting part of the world, but specifically in this part of the area, there's, like you said, I think Endeavor Mining, a lot of the tier 1 miners there. So there's a lot of activity going on. I believe this belt that you mentioned, when I looked into it a bit more, there's 40 to 50 million ounces already kind of identified. It's a massive.
That shear zone, which is called the Senegal Mali shear zone, is definitely one of the most productive belts in West Africa. And to be able to acquire that prime real estate, let's call it, with that productive geology, is just an opportunity we couldn't pass. We've been on the ground multiple times by now, and we reiterate our view that there is a lot more work that can be done. And again, by de-risking financially the exploration funding, we believe we can unlock a lot of value. We have that opportunity. Let's see.
Fantastic. Well, at the same time here, you've started gold production in the Ivory Coast. Séguéla is, I think it was a couple weeks ago, announced production. So looks like this kind of continues on your strategy of growing, but also looking for high quality ounces like you have in the Ivory Coast, where you can make good margins. If we could talk more about now, I guess, the gold production side, how are things looking there? So we got the kickoff there. How are things looking and progressing to, I guess, full commercial production?
It's been 2 years since, little over 2 years since we acquired Roxgold, and about 18 months since we made the construction decision at Séguéla. And it's been 2 years of investment, of hard work, and really we have not seen the benefit of the acquisition yet. The rationale of the acquisition was Séguéla, right? The Yaramoko mine, which was part of the Roxgold portfolio, was an important asset, yes, but the driver was Séguéla. That's where we see the true value of the transaction. So we made the acquisition, pro forma, Roxgold shareholders became 34% owners of the company. And we've been deploying capital, almost $175 million in CapEx have been allocated. We delivered the construction on time, on budget. And this month of May, we poured our first gold. So it's only now that we go into a harvest mode. Yes. So our capital demands drop. We don't have a large capital project anymore outside of our sustaining capital at the mines. And we start harvesting from what will be our highest margin operation. We expect Séguéla will contribute around 50% of the company cash flows moving forward. It's a flagship asset, long life of reserves, tremendous exploration potential, meaningful production in the range of 120, 150,000 ounces with upside potential, and low cost. Our all-in sustaining cost is going to be in the range of $1,000 per ounce. So the industry average, let's say the median all-in sustaining cost for global gold mine production is about $1,300 per ounce today, right? So this mine will be producing at around $1,000 per ounce all in. So, we're quite excited, and I believe the market is not giving full value for Fortuna yet for those cash flows. If you look at Fortuna's valuation in terms of multiple over cash flows against peer companies, we're being deeply discounted. And I believe this is a difficult market, and investors are on a show me mode. So we just have to deliver the cash flows in the second quarter, third quarter, fourth quarter, and show the strength of the assets, right?
Right, and that should help with the analysts who cover the company after they see some like you said, quarter or two of operations taking place. Then they should start re-rating more. But the cash flow is kicking on now, so the company is going to see a lot more cash flow coming into the company. Balance sheets improving, so the risks are falling, and you've got a nice new acquisition here to another exciting exploration project to work on.
And something to highlight, and we have touched on this before in previous conversations. We're putting together an asset base that can perform throughout the precious metals price cycle. And in the first quarter of 2023, we have been selling gold or realizing a gold price that's basically the same as the Q1 of 2021. Yeah. So basically, over 2 years, we've been selling gold at the same price. Silver, even lower, 14% lower. So 2 years ago, we were selling silver at a higher price than we were in the first quarter of this year. So what has happened over these 2 years? Prices have basically stayed flat or dropped a bit in the case of silver, and costs have gone up, what, 30%, 25, 30% for everybody, not just for us. If I make a comparison, I go even back further to the last, solid bull market we had a decade ago, when prices peaked back in 2011. Silver reached $30 plus, gold around $2,000. I remember we were selling silver at an all-in sustaining cost of about $9-10 per ounce in 2011. Yeah. Today, silver is at $22, 23, 22, and our cost is now $15 per ounce. Wow. Right? Yeah. So there's been tremendous margin compression. In spite of that, we're running a business that can generate free cash flow, and we are adding assets with good opportunity for margin. No, so we don't depend on prices going higher or not. We cannot control that. We all have an optimistic view on metal prices, and investors can time when they decide to go in and go out. But we operate the mines every day, so we have to be able to make money in whatever price environment we're put under. Right. So that's why Séguéla is so critical. Yes. It's a very good asset and provides what investors in the precious metals equities, mining equities needs the most, which is provides good optionality.
Yes, and it really is a big de-risking period now with this mine coming on, cash flow kicking on. It really is. I really expect these analysts to start upping their ratings and their targets with this production coming on, and so I think there's a lot to look forward to on that side as well. Now that the production is moving forward, but I think the next quarters are going to tell the story themselves. The analysts don't need to help to translate that, but the exposure, I think, of Fortuna will start to grow with the mine now in production. Is there anything else that haven't covered since the last time we spoke? I think that this is a pretty big milestone and a nice acquisition. So this is gonna add to the excitement here.
Yeah, we are looking with a lot of anticipation to this second half of the year, and looking, we're going into a harvest season, right? Yeah. So that's always exciting. Yeah. We look forward to it. Yeah.
And do you continue to look around in the area? I know that you always have different opportunities coming by and coming through, but even after Chester's acquisition, do you still continue to look around if something, maybe even more specifically in West Africa?
As I said, or strategically, we are anchored in these two regions, West Africa. Africa is a very big continent. We're not looking for opportunities throughout Africa. We're anchored in West Africa and near neighbors, and in Latin America, in the Cordilleran range, Andean range from Mexico down to Argentina, which is where we have our operations, right? Yeah. So strategically, geographically, that's where we remain focused. We remain focused on both silver, gold type opportunities. Okay. And right now, where we're devoting most of our attention is organic exploration within the portfolio. We believe there is a lot of low-hanging fruit in the portfolio at Séguéla. I think the way we have been able to advance the Sunbird discovery in Séguéla is, in spite of us losing some ounces in Yaramoko at the beginning of the year, We're getting some reward at Yaramoko, on the exploration front. So, across the portfolio this year, we had at some point 12 drill rigs turning. So we're very focused on organic growth. Having said that, we will be opportunistic around things that might emerge in these areas of focus.
Yeah.
And Chesser meets a lot of our criteria. So it bears a low financial risk to the company. No, the financial commitment to the company is small and low risk, I would say. Now, it bears higher geologic risk because we need to grow that resource. But that is a risk that we are comfortable taking, geologic risk, right? Because, that's our expertise. That's where we add value.
Yes. Excellent. Right. And I think is an excellent acquisition. Opportunity in this market with where the gold and silver price are positioned, even if they were to hold around this area, the market is not valuing these companies very well. They're just so depressed. So I think it's an opportunity for companies like Fortuna to go in and consolidate and take advantage of this, because I can't imagine once the market takes off, these small juniors to large producers are all ready to get revalued.
Yes. I mean, again, it's I say we are being opportunistic, but having said that, we never try to time the market. That's something that investors can do. But we just see fundamentally the value proposition at Chesser, and I think the Chesser management has done an excellent job taking this over the last 3 years from a mere geologic concept in a good neighborhood to a reality. They have outlined deposits, they made discoveries, and the market is not rewarding them.
Yes. Yeah.
So that's a great opportunity when a company like us can come in and fund the work that needs to still to take place, and they're struggling to fund because just the equities, mining equities market is dismal right now. It's the worst I've seen in many. I'll say in 20 years.
Yeah. Having started investing as a teenager in this sector, I also have. I'm shocked at the lack of enthusiasm with gold. Everything going for it. It's sitting at a massive breakout point, and yet no one seems to really care, and it's not reflecting in the share prices or nothing.
I think I've seen a market like this for equities, talking about mining equities. But then gold was trading at $250, $280, $300, and silver at $3.50.
Yeah.
Right? So correspondingly, mining equities were, no one cared about them.
Yeah.
Now, on nominal terms, gold is close to record highs. On inflation-adjusted terms, gold should be at $3,000 right now, right?
Yeah.
At least $2,500 to $3,000 if we just adjust for inflation, without considering the kind of havoc we are in with geopolitical tension, with macroeconomics around the world and whatnot.
Right.
So just adjusting for inflation, so as I said, back in 2011, I had 3 times margin over my all-in cost, 3 times margin. Today, my margin is 25%.
Yeah.
Right? I operate with 25% margin. 10 years ago, I was operating with 3 times margin.
That's incredible.
Right?
Yeah.
So and that's when the investors' appetite was really there.
Right.
Right?
Yeah.
Gold is nominally at record highs, but inflation has been a reality for everybody. Mines have been no exception. So we have seen tremendous compression. We need, I expect that if gold moves, and when he does, along with silver, what we'll see is that margin growth again, and easily we can see 3 times margin again, right? If we see To see 3 times margin today, that means that we should be seeing over $3,000 gold, right?
Yeah.
Close to $4,500 gold.
Mm-hmm. Well, and you're in a better position than other mining companies that I follow. You have lower costs on a lot of mines and some better assets. So it's a struggle. The industry is struggling, even though one would think at these prices everyone is thriving, and they're not. But that's where opportunities are made, and then when the bull market really comes around, times like this, where you see companies, and you've done this in the past. I saw that with San Jose when you were investing during the difficult times, and went to Lindero, and now the acquisition with Roxgold. So it's been great to watch the development.
I opened the Cayoma mine back in 2006.
2006.
But when we acquired it was 2005, and I remember that we used $4 silver in our financial model.
Yeah. Oh.
$4 silver, 4.20.
Right.
We used $4.20 in our financial model in 2005.
Yeah. Well, it really shows the inflation, the production costs all across the board on all mining companies. It's a real reflection of the monetary expansion and inflation and price issues that everyone's dealing with. So I think it's a testament to see, how Fortuna has been able to weather these extremes in prices and develop and build the company and good and bad times. So I really want to follow up here with Chester and watch that develop. And congratulations again on Séguéla. It's a nice big milestone for the company. As a shareholder, I'm quite excited. So I think the second half of the year we'll start to hopefully get more rewards by the market for this milestone. So I appreciate the updates. Congratulations again on the gold production there, and looking forward to connecting with you in the near future.
Anytime, Peter. Anytime.
Thank you, Jorge.